How to become an investor. Are you someone who just decided to be an investor, but what will you do now? Are you planning to buy stocks and wish it will work out best? Well, you can hope for sure, but it's not enough, because when one wants to be a great investor, there's something more needed than just luck by your side, and that's called knowledge. To gain that factor by your side, you need education, which helps you be a great investor. Let's go in depth by looking at this example. For suppose you are given a task that you have to fulfill no matter what, and you are given enough equipment too. But now what? You don't know how to use that equipment to carry out the task, and you have the choice to take help of someone else who claims to know how to make use of those tools. But the question is, are you sure? Your success depends on that person. Do they know what they are claiming? That simply means if there's a lack of knowledge, it forces you to depend on someone else. Then when we are not able to do something for ourselves by ourselves, then we just rely on others, and so do we surrender all of our control to them. There come so many questions in mind. Most important question is, are they willing to help us for themselves? Why do people trusting these advisors? The reason we are putting all our trust in these faceless financial advisors is because of all the myths and lore surrounding them that makes us believe and take that decision. We create all the hopes and believe their magical prediction blindly, and it is all planned in a way that makes us believe that ordinary people like you and me are not able to use any of the ability those investors have. We give all the control to 401 companies. Just assume that we can't learn any of these skills for ourselves. Why you should consider becoming an investor. You have heard about a great investor, Warren Buffett, right? Let's see what he has to say on how to become an investor. Warren Buffett says, "The ultimate irony of the investment business is that there is no question that an obstetrician can deliver babies better than the husband or wife. If you take dentists as a whole, they will pull teeth or fill teeth better than if the patient does it themselves. But in the investment world, someone who believes in American business and is consistent will get results that exceed professionals as a group." Understandable, isn't it? Which means the concept that the mutual fund in 401 only the experts on Wall Street and have the skills to invest safely and profitably is wrong. The unsatisfactory we get when we let someone else manage our investments don't gain any experience, no personal satisfaction, no financial rewards of becoming good investors ourselves. If the case is something like you don't care about your money, neither you care about increasing it for the future, then no problem, go for it. For sure, hand it off to someone else. But we find investing purposefully in the first place because we surely want to increase our wealth. When you pass off the entire control of monitoring your money to someone else, you are never going to find out what kind of investor you could have become. You don't have any idea, right? It's understandable. There's nothing wrong with using services, but still nobody cares about your money as you do. Step 1. Understand the investment principles. It's important to understand, how does the stock market works? What's the difference between a share, a bond, and an investment fund security? You need to learn some basic concepts, which includes understanding the features, understanding the risks involved, its liquidity, the potential returns. Understanding will make it easier to choose the investment that is right for you. If you want to become an independent investor, you're the only one in charge. Make certain you have all the necessary skills and time. Choose your investments wisely. Watch the markets. Don't forget to review your portfolio's asset allocation, dealing with market ups and downs. Step 2. Determination about how involved you want to be in your investments. Either you want to monitor your investments day to day or want to stay on top of the latest news. You expect to make several transactions a month or a day. It's going to help you decide what kinds of investment products going to meet your needs. For example, a trading specific security is going to require a bigger investment of your time regarding research and monitoring. It's not the case at all if you rely on the expertise of portfolio managers for choosing investment funds. Exchange traded funds or index funds, all types of investments have different features, and because of that, it's crucial to have a good knowledge before choosing your investments. Step 3. Open an online brokerage account. If you are a beginner or an experienced investor, if you are passive or very active, it's always required to choose the trading platform that will offer the features that work best for you when you want to trade effectively based on your market knowledge and trading frequency. Step 4. Identifying your investor profile, investment strategy. It's important to ask yourself, why are you investing? What are you looking for from investments, either income or growth? Are you ready to tolerate stock market fluctuations? When you know that all, you get help to make investment decisions based on your investor profile. Also a great way to the horrible news you get due to fluctuations and stop yourself acting like you don't have any emotion and keep making the wrong decisions. Step 5. Build your portfolio. Diversification is very necessary to decrease the risk as much as possible. Selecting investments across multiple asset classes, management styles, geographic regions, along with your objectives, your investment profile, and risk tolerance level. Diversification in your portfolio will make it resistant to market fluctuations, as if one asset class didn't perform well, others won't necessarily do the same, or drops in value, as all of them evolved in different contexts. Step 6. Have an eye on what's happening. It's important to stay up to date and see what is happening to take the next step. Step 7. Invest. It's time to perform transactions. Don't forget to stick to your strategy. As mentioned above, beware of know-it-all friend. Step 8. Manage your portfolio. Portfolio management is necessary as well as market monitoring. Conclusion. It's good if investing is considered as a life skill. We are able enough to learn new things and acquire new skills every day. We have enough capacity to pick up valuable information and store it, and for that, practice and perseverance are necessary. That's it for today. Are you planning to become an investor? Comment down your thoughts. Please like and subscribe for more videos.